Hey folks, LA Lowell here. Mega cap earnings week, a big week. 5 of the 7 mega caps are going to report the technology stocks. We're going to start and we're going to run through each of them and ask that question: can we make a trade on any of these stocks over the earnings season reports? So let's look at Google to start with here. The first thing I want to do is call out, this whole idea of angled lines. If I come in here and I want to draw a line, when I'm there, has it broken down here? Am I supposed to draw the line this way now? It's just hard to know where to draw a line when you're doing them at angles. You really want lines that are horizontal, like this line. That line tells you something. It tells you a level. It tells you a price level. This comes back into a price level where buyers should be. That's what this green is telling you. Matter of fact, the darker green is definitely telling you that. And that's what they do. They buy it, send it back up the other way. That's a hammer reversal on the monthly chart. And assuming you get a continuation, right, that's a very bullish thing. And so Google so far is doing what it needs to do after having that weakness that we had talked about that was going to come into this stock. We were talking about weakness back here. Well, we got it. Now it's trying to come back up. If I look at this and ask myself, what's the key level? Well, it's right here where the resistance shows on the red, which is the bearish retest region off that swing point low. There's also this high volume bar here. That's going to be a problem. So you got to get over those, right? If you can close over here, not only are you going to test the highs, you're going to new highs. On the converse side, this is the key area on the back side, right? You got to be able to hold that bullish retest region. It's already been tested here. It's been tested here as well. So if you come down again, you would expect it's going to come down deeper. That's also going to bring it back into this retest region on the monthly chart. And so when I look at Google and I look at the fact that, on the time frame MTTFs, it's extended, this thing wants to do something on this time frame. Is it going to be up or is it going to be down? Well, that's what the earnings are going to tell us. If I had to lean one way, I'd lean long. But given that the fact that this thing, it's got to get up to here, up to there really, and it's got to break below here, and we're sitting up there, do I want to take this kind of risk in front of earnings, right, to try to get a push this way? No, I'd rather wait, know that it's going to break out, and then take the position. It's my preference, right? You don't have to trade. It's not like, you're sitting at a blackjack table and you got to trade every hand. Here you trade the hands you like. This one, it's so-so. Okay, the next one is Microsoft. And looking at Microsoft done nothing wrong, right? If I go back here and look at this, here's a swing point high. Here's a break of this swing point high. You had to get bullish here, right, if you weren't already. And then this break, you definitely want to be bullish. This area right here, this bar, right, that's a test of the highs. Here's your volume. Here's your volume back over here, right there. So you have higher volume. So it tested with higher volume, comes back a little bit, and then breaks out there. Now it's continuation. You could kind of say it's a little dangerous here, right now, because you kind of got this head and shoulders thing. But you could also look at the other side of it. Your neckline would be here. You could also look at the other side of it and say, well, this is like a W kind of position, right, where this thing's going to move on up. So you can argue it either way. That's always the problem with these. What I do is look at levels. That level looks very dangerous to me. If I break there, that's going to be breaking here, which means something bigger is wrong. And so, I wouldn't want to see this break down. Now, it has to break out, and look at where it is. It's in the middle. Who cares, right? There's a lot of risk to take a trade that's in the middle. You just don't have great reward and risk. Okay, moving to Meta. Now, Meta, is a very surprising stock. I thought this thing was going to be weaker than it was. Here's your breakout, clean breakout, and extension. Nothing wrong with this. Some people will tell you volume's trailing off. Well, so what? Price is going up. And until price doesn't confirm, then it just simply doesn't matter, right? You can go up on lower volume. Here's your weekly. Here's the weekly breakout right there. I thought, and this is what I expressed in prior videos, that Meta was going to have a problem because it broke down, did a retest regen and failed, and did it on the very next bar. It did follow through, but it held above that high, and now went back up, tested, and now broke out again, and took off. This stock is confusing in that it's stronger than you would think. At the same time, what a huge run already, right? So I think consolidation would be in order here. Would I want to buy it? Well, if I were going to buy it, I'd probably buy it back in these green areas that you see. But again, why take that kind of risk? I would like to see this thing reset, right? And the reason I'm saying all of this is look at this bullish 95%. This needs to reset. So you need to break a swing point low. So if you were to break a swing point low, right, and then consolidate above these, don't allow it to go that low, then you've got something in this area here that you could maybe work with. But right now, again, I just don't see the trade. Okay, moving to Thursday, Apple looks pretty good, right? You had let's draw it in here. You had a retest regen here, and you actually have one inside that, right? And it held all of those, and now has definitely regenerated higher, right? Here's the break move, and you made it move up. There's the August swoon there, the lows. You can see support at both that level and the lower level. Apple looks fine. It doesn't look bad at all. You've got some, up and down movement here, but in general, again, your breakout is here. That's your retest regen, and there's one there. And so it comes back in and retest and does what? Regenerates. As long as it does that, it's fine. You've got a swing point high here now. Apple's at a point where if it can get over this, it can extend even farther, and so it's right up there waiting for a reason to go higher. Do I like Apple here as a buy? If I had to pick any of the ones I've talked about so far, this would probably be the one. It's a steady eddy. It just continues to perform over time, and so there's nothing wrong with Apple. The thing I like most about it over here is it's not extended. There's no extension, so in other words, this thing can go higher. If I look at the general market, right? The market's all bullish. The problem with the market is it needs to reset at some point on this time frame. So, in general, that might be a little bit of a headwind here at some point, but if I had to pick one so far, Apple would probably be the one. And finally, let's switch here to Amazon. Here's the Amazon. Now, Amazon has this huge range. It's been this way for a while because you've got this huge bar back here that's anchoring it all. But in terms of support range, right? Very seldom do you see charts end up this way, but when you see the different shades, this is the lightest, the next lightest, and the heaviest. The heaviest shade is the one you pay attention to because that's where most of the action is going to be. This has gotten over, if we dissect this now, this has actually gotten over a swing point high here. So that was the breakout there over that swing point high. There was another swing point high back here. Get rid of that. And that one was closed over on this breakout right there. Right, so it's broke out, but it really hasn't been able to go anywhere. And that is a reflection of just the fact that this is a major break on a monthly time frame, and sometimes it takes a little while to get these things going. I don't see anything wrong with this, except it needs to get the continuation, right? You need to see the continuation here at some point. If you don't get that, right, then it's more of a problem. If I look at it on the weekly time frame, you got a lot of resistance here overhead, but it's, it hasn't done anything wrong. I would say that the problem, if I had a problem to point out, back here was a problem just like we saw in Meta, where the bullish retest regen, that's the breakout. This is the retest regen area. It goes way below it, right, and then back up. And so you're coming back to that area that should have been support the first time around, which was in here, right, and wasn't. And now you're back up there to that same area. This has the look of something that can go higher, but it's got to prove itself. It's extended here, it is extended there on the daily, and so I would expect earnings is going to break this thing out one way or the other. Which way do you bet? Long term, you have to bet long. Again, do you take that kind of risk in front of earnings? Why take that kind of risk? Just wait until afterwards and do something with it then. So in summary, which of these stocks do I want to trade, if any, in front of earnings? The only one I could say with reasonable certainty is probably Apple. Apple's the steady Eddie, not extended. This one probably goes higher. All the others are more of a toss-up. Nvidia comes out later. I do like this stock a lot. I actually own it. And Tesla just reported. I have another video I just put out on this. You can watch that. We took a position in that prior to the earnings because it had a good setup. That's the way it is. Have a great one. Stay safe. See you next time.